Yeah, good evening, friends. On behalf of Resurgent India and SBI, I would like to welcome all of you in this today's webinar, which is on very, very important topic in the current scenario. This unleashing the power and potential of fintech and NBFCs. So, friends, we have a very good panel today. The people who are from the industry itself, they have worked in the different organization, then they've started their own ventures as founder and co-founders in the fintech space. So I'm quite hopeful that today's discussion will be very, very vibrant. This current scenario, because everybody is now looking towards the fintech and the NBFCs and the banks collaboration. Basically, now the time is for collaboration. So as you've seen, this currently out of 100 unicorns, 17 are from the fintech only, basically. So this number is increasing day by day. And by reading some data that the overall industry estimation is something around $23 trillion. Globally, this will be the size of fintech industry in maybe next 5 to 7 years. So, which is, I think you can understand from this number that it's a mind-boggling number. And once this will achieve, how many companies will become the unicorns, how many companies will be the leading the market and all. So this is a very, very good opportunity. And you know that the digital financial solutions, especially fintech, have rapidly increased the prominence over the past few years. I'll say that last 5, 6 years, there is a big change in that scenario in this system. And for the borrowers, for the lender, the life has become very, very easy actually now, because you see that the finance has become very simpler actually, and more affordable also, and more accessible also, because you see that in India, 60% population is living in the rural and semi-urban areas actually. And there are lot many people, even they don't have bank account actually. In PMA, I think, then PMJBI, I think the government has done some wonderful job where they have opened a lot of bank account, but still the many people are there. They are not having access of credit actually. They are so they are unserved and underserved actually. This can be done through the collaboration between the fintech companies, NBFCs, and banks, and the money can reach to these people at the lower cost, at the faster speed, and in a proper manner also. And fintech and NBFC are playing a wide range of services. They are helping in many ways to the system, either by way of lending, by way of providing AI tools, by way of the other facilitation, which is helping overall to the industry actually. And it is scaling very fast also. And we see in the overall industry, the Bajaj kind of player, they have grown like anything actually. As of today, if you are looking for any loan, anybody looking for any loan, actually it can be available within 2 minutes, 3 minutes kind of situation actually. So, but there are a lot of challenges are also there, a lot of hiccups are there, which we have seen. And so we have the right kind of people here who are running the show, who have seen the industry, who have already done their own ventures, and they have successfully done the huge cases also, where the things are moving, and a lot of new system, new processes are coming in the discussion, and banks are collaborating a lot. Actually, the app like if you see, then it's I think the largest app in the country actually. If somebody the customer of SBI, he can do everything on Yono actually. So like this, there will be more than 100 Yonos are required actually. It's not only one Yono will work out in the entire country actually. So our partner will speak on that, and I believe this session will be very interactive or very interesting also for all of you. So we have Mr. Pramod Kathuria, who is the founder and CEO of EG Loan. So welcome Pramod ji for joining with us in today's webinar. And then we have Mr. Abhishek Gandhi, who is the Chief Business Officer from Fatak Pay. All these are young, quite young, actually energetic, and they have the mission to change the entire ecosystem. Then we have Mr. Rohit Arora, who is the CEO and co-founder of Bridge 2 Credit and Bridge 2X. Welcome, Rohit ji. And we have Nagin Kumu, who is the founder and CEO of Digitap AI. Welcome, Nagin ji. Then we have Vivek Vedaji, who is the co-founder and CFO of Credit. Welcome, Vivek ji. So we have the people who understand this market, they understand technology, they understand ecosystem and all. So I would like to invite our panelists for their deliberation. So I'd like to invite first Pramod Kathuria ji, who is the founder and CEO of EG Loan. And he has very good experience of working in the various banks and the corporates in the last many years. And now he's running his own company, EG Loan, which is basically into the marketplace of the home loans, basically. So we have in this panel, we have speakers who are from marketplace in the home loan, MSME loans, consumer loan, personal loans, providing AI and the ML solutions also. So this will be a good, interesting discussion. And so Pramod ji, first of all, thank you very much for joining with us and giving us this opportunity to moderate this session. And I think as we have discussed, you are into the home loan marketplace actually, and home loan is the toughest asset actually in the entire ecosystem. Doing consumer loan, personal loan, there are less formalities, the less documentation. Then there are valuations, legal. There are many things which need to be done physically. So we would like to understand from you that how you are basically changing the entire home loan ecosystem. And in this the collaboration era, how do you think that the banks and other lenders will come to you and then they'll say that we'll want to go with your platform? So over to you, and thank you very much.
Thank you, Mr. Ashish. Really appreciate. Good evening, everyone. So a quick bit about my background. I've been actually started my career with mortgages and home loan, and essentially working with one of the largest private sector bank. And that's where the thought of home loan and the expertise on that segment comes in. Uh, uh, Two, three things directionally, and I will come to specifics. Mr. Ashish kind of alluded to. We've seen nothing short of a revolution when it comes to various financial products. One way to look at it is the number of startups or the new entrant who have come into this space and have tasted success at a very different magnitude. There are people who have been able to geographically show a great deal of success. There are people who've been able to incorporate the entire process. There have been people who've been able to do multi-product, multi-channel kind of approach. And but the biggest winner here is that the consumer behavior has changed. And when you change a behavior of the consumer, I think you have to start making progress in that direction so that you continuously start having that experience from the consumer side. The bank starts upping their game. And but before starting Easy Loan, which is about 15 months old now, as I was talking to some of the top management, private sector, public sector, NBFC, everybody is saying that our board 50% of the time in board meetings is essentially around the digital, how to source customers digitally, how to process the information digitally, and so on and so forth. That said, so in the environment that I dabbled into, essentially on one side, I see a lot of success across financial products, great deal of work done by startups, fintech, NBFCs. On the other side, we see a desire from the banks, larger, private, NBFC, wanting to do a lot on the digital side and doing few things on the digital side and wanting to do more. Then we look at the consumer behavior, which is already there. The consumer is already much ahead on the curve when it comes to consumption of financial product on the digital side. And then we look at this one problem, which is about 34% of the entire lending piece, home loan, where we see not as much of innovation, not as much of a disruption when it comes to, say, the entire process, which is reasonably complex, right from understanding A, the KYC element, B, the understanding of customer based on financial information, and C, the secured product or the subject in this case, which is property. To get all this together is really, as Ashish also kind of mentioned, it's a complex project. How is it that we are doing it? We begin with looking at creating a customer journey which doesn't need to be a replica of what you do physically today among the channels. And there are channels, there's a fragmentation on the channels, right from B2B channel, which is sourcing from the developer to brokers to chartered accountants to actually a B2C where the customer comes in and so on and so forth. So we looked at, first of all, reimagining the entire process, and we've been able to deduplicate a lot of deduplicate a lot of data sets which we were sort of bringing in. Then there's a great deal of framework which is available today: access to Aadhaar, PAN, access to bank statement through net banking, access to ITR information, GST information through the portals. And this is just the beginning. With account aggregator coming, the framework coming, getting recognition, your access to data sets will be higher. And I know incredible work also happening in terms of legal reports for the property. We've seen policymakers and the registration, which is happening digitally, although there's a lot more work need to be done in that direction. We've been able to essentially crack the entire onboarding piece across 20 lenders, made it unified, have the same customer experience, maximizing features like autofill and fetch so that one doesn't have to duplicate the effort of putting these information, be able to do a lot of activity in real time. While you may, bureau score is very rudimentary, basic level of looking at a profile. There's the other data set which is available on the financial side. Try to have alternate data sets to the prime data sets. And that kind of gives you a very good thesis around customer. Run that thesis along with the credit logic of the bank, and you are able to kind of extract a reasonably good credit call. And that said, we identify ourselves as a front end to the banking system, and we want to enable this process more digitally. There is a credit responsibility with the bank, which they undertake, and they kind of do the book building. We essentially make the user experience that much more simple, fast, agile, maximizing the reading and access capability of the data sets which is available. So that's the part I think you were saying, how is it that we simplified the complex process, which is quite lengthy. I recognize that. A lot of work is happening at the later stage part of it, where the physical sale deed or the legal report is involved. I'm aware of the great amount of work which is going in the account aggregator framework, which is the data set made available. But we've been able to really disrupt the everything else, which is coming from a multiple sourcing channel perspective to multiple user case perspective, which is various segments, in terms of salary, non-salary, so on and so forth, being able to compress the geographies together and align that journey, being able to get 20 banks who have very different application form to a common denominator and made that experience that much more streamlined. Mr. Ashish, you are on mute.
I'm really sorry. So, I think you have given a lot of insights from your point of view, but still, because home loan, where we are talking home loan, you see that when we can think of getting home loan within one day. I'm not talking half an hour or 1 hour actually. So, because you are the player in this market, so your take on that.
Yes, and that's not future you're talking. You're talking present to near future kind of window. I do know of NBFCs. You mentioned few neobanks that we also work with, and I'm not going in specific brands here, where the sanction is we are able to issue a sanction advice within 5 minutes. Having said that, when it comes to real bank and the NBFC who have a book issuing a sanction, that's happening in the shortest duration, 30 minutes, and intraday sanction, which is happening. Now, the way home loan product is structured, you post sanction, there are certain steps. There are certain NOCs required in a primary
Yeah.
sale. There are certain documents required, like a sale deed submission required. And then the transfer of funds is a faster process. I don't think there are too much of friction or knots that need to be opened. I think what is area of solving this is the movement of document from the customer to the bank, and that we are able to crack that. But if you want as a unified journey across geographies, across this thing, I think there is tremendous work which is happening. There are NBFCs, there are new entrants who are built on tech, where the operation and the structure is built on tech and not the branch framework, being able to turn around rather quickly. If it is not the same day disbursement, definitely happening same day as the documents received. And the document turnaround time is also reduced to 3 days in most cases than not. Yes, and more work is happening. Till such time there is no real time availability of document, this will remain more like an intraday kind of process. And I hope for the day that the sale deed is available real time and NOC is real time updated in a portal. And I think you will start seeing that magic on the disbursement as well, wherein a customer applies and the disbursement happen almost instantly. I think you'll have to upload those documents digitally and should be getting the same level of recognition when it comes to title ownership and the transfer of rights. So long that can be solved, I think it will happen in that direction. But I do know there's a tremendous amount of work which is happening from a legal report creation, same day or 5 minutes or 30 minutes digitally without going to the property, based on the GPS location, based on the last land record, and putting it all together. So that work is already done and being done as we speak.
Okay, great. I think a lot of things are happening, and this will come convert into results also. One more thing, because you see that as a marketplace, you have to tie up with the agency which are into funding actually, like NBFCs, HFCs, and banks. Why they should collaborate with you? Because they have already have their own branches, they have their own system of, and they have everything basically. So why they're coming to collaborate with the partners like you actually?
So my belief on this, and it's not my belief, it's how it is seen. Earlier, a NBFC will look at fintech as a competition. Now, what we've seen in the last 3 years, they are the biggest ally, and a lot of fintech fire based on NBFC tie-up. And this is how NBFC has been also been able to take their story ahead. You're talking about maybe a segment which is very small, wherein NBFC has the tech capability of actually receding into, and the dispersion is so high that they can cover multiple cities, multiple states, and so on and so forth. But that largely, if you see it and you look at any new concept, whether it is on the credit card or the insurance or financial products or even personal loan, you will find that some NBFC is firing a fintech or a fintech firing the NBFC. There are alliance of sorts, more cases of alliance than competition. So to answer your question more specifically here, I think home loan is not a product which every NBFC can do it. It's largely in the bastion of private and public sector bank. If you were to look at only the volume and do a cut on the percentages, you'll find about 80%, 90% is really concentrated in that space. NBFC is doing incredible amount of work there, and they're picking up certain segments where they think they can do a much smarter credit call, and hence they sort of want to lead there. But whatever being said, in a prime brand, whether it is a bank or a private sector or an NBFC, whatever work done on the digital is more inward than outward, and it's more native. So when a large private sector or an NBFC go out in the market to acquire a customer, they talk about only their products. Whereas a easy loan kind of platform brings all those digital synergies together and talk about the magnitude and the multiplicity of offers. We talk 20 lender option to our customer, and eventually customer will either go to 5 digitally powered NBFCs or banks or so on and so forth, or they can come to a marketplace. Essentially, we are nothing but a front end. We do some work in terms of discovery of customer, processing the profile and matching the lender, and eventually give it to lenders. We don't do it. So it's really doing the work for a lender. So we are extremely strong companion. Can we exist without NBFCs or a bank or a lending institution? No, there's no use case for us. We only enable. We are the funnel. They are the benefactor of that. We get paid for doing this business or whatever it is. That said, we are complementing in our business, and there's no competition of sorts. Why will they come to us? Because this is how they will engage with a digital customer. This is how they will get the lead generation. This is how they will get the entire sanctioned with along with the analysis and documentation for the customer in a very 90% conversion ratio kind of customer base, near 100% converted customer into their pipeline.
So
and
so sorry to interrupt you. Complementing, not competing actually. So ultimately, this collaboration, the power of collaboration is that when you are complementing each other, both are getting some kind of space in the entire ecosystem actually. So they have the money, you have the technology, the customer. So both of them can join together and can do the entire process. So
absolutely,
I think that's a good message which you are giving the compliment.
Yeah, another thing, just to say that, and then last quick one. So I look at it, NBFC are largely governed by guidelines. NBFC or banks, they're governed by certain guidelines. There is a charter, how you can go about funding that. And then it's more important to look at the profile of the customer, protect the non-performing assets, be able to make sense out of the capital earning, from the cost of capital to what you can lend, who can you lend, and so on and so forth. So I think the real science is there. In a fintech or a player like us, the real science is to actually discover the customer, profile the customer, make it fast, create a user experience. So we enjoy the fintech sandbox, which allows us to be a lot more flexible, more creative and innovative in terms of processing, as opposed to the capital layer, which is where the focus is on how to bring the profitability around the dollar that you have borrowed or sort of invested in the entire business. So I think they're slightly different when you try to dabble into doing both. While a bank and NBFC should maximize the tech part of it, but this is something else. This is here the focus is completely on discovery and the processing and creating the pipe.
Okay, great. Thank you, Pramodji. I think you have done very well in terms of your deliberation. So friends, now we have Mr. Abhishek Gandhi. Mr. Abhishek is expert in financial sector. Actually, this is his Patak Pay. He is the co-founder and the chief business officer of Patak Pay. This is a third company, I think, in the financial sector which you have started actually. Yesterday, I met with Asneer actually. So he has also started third company called Third Unicorn. So he said when I started the company named Third Unicorn, he called he was called by the investors that you have made the unicorn and you have not taken money from us actually. So this is the situation. So Abhishek, you have very good experience in the financial. I think P2P. You have started P2P also, and the other fintech company. So it's great that you are here, and we'll definitely understand from you basically what you are doing in the fintech space actually. So it will be great if you can cover up in 1.5 minutes about your story in terms of your organization, what you are doing, and what is your background.
Thank you, Ashish.
We would like to understand from you that in terms of the fintech and NBFC collaboration, what according to you are the areas where NBFC and fintech should collaborate and unlock their immense potential? Because as I discussed earlier, also they both have their own potential actually, own areas of work. But the only thing is that how they can collaborate. So as Pramod has also told it, we are not competing, we are complementing actually.
Correct.
And then another is that how old NBFC NBFC with the old thought, actually, traditional NBFC, I call it. And fintech can join hands to achieve the government objective to reach out the last mile of the country. Because government is behind the
Absolutely.
NBFC to reach at the unserved and underserved, actually. So that is another area which need to be discussed, because I think we are reading in the newspaper that a lot of guidelines will come from the RBI head for the fintech. So fintechs will also be governed later on, actually, like NBFC. Then where will be the scope for both of them to come together, actually. Over to you, and thank you very much.
Great. Thank you, Ashish. Thank you for the introduction and very pertinent questions to the current scheme of things. So very briefly, as you rightly mentioned, this is my third fintech company, last one being Rupee Circle. The idea with Rupee Circle also was to drive financial inclusion and to basically serve the underserved and unserved market. One of the things that we were missing at Rupee Circle was the fact that there was not enough customer engagement. So we were doing personal loans for people, but we realized that a lot of these people actually lacked basic financial education, financial discipline, and there was not enough engagement with the customer. So it was not a very holistic product that was that we were offering. So with FatakPay, the idea is that we want to become the financial wellness partner of the low income segment. So the idea is that we want to be their go-to financial service provider and help them through their entire financial life cycle. And that is what we have set out to do as FatakPay. And the major focus here is going through the employer mode. So we are focused on a B2B2C model. So the idea is that we approach the customer through his employer, and in return we are solving a lot of constraints for the employer themselves. A lot of these employers work hard in terms of managing their employees, in terms of retention, attrition, and also a lot of their working capital is blocked in managing early advance salaries, prepaid expenses. So on one side, we're helping the employer manage their employees and provide this FatakPay as an employee benefit program. On the other side, we want to engage with the customer and we want to be his financial go-to partner. So having said that, our idea is that the penetration, the first product that we're offering is similar to a monthly revolving credit. So the idea is that credit cards as a product is a fantastic product because it helps you manage from one payday to the next. It helps you manage your cash flows and provides you with an interest-free 30 to 40 day credit. Again, only 4 to 5% of India's population have access to such products, and especially in the low-income segment, credit card is unheard of. It's an aspirational product. So what we've done with FatakPay, our initial offering is a monthly revolving credit line, which works very similar to a credit card. And but at the end of the day, it is a credit that is extended to the customer, and he is able to utilize this credit on in various forms of payments. So UPI based payments or bank transfers, etc. And end of the month, whatever is outstanding gets paid back to FatakPay. So that is the product that we are working on. The idea here and the questions that we've asked, again, very pertinent. So the basic synergies between NBFCs and fintechs, we identify, or at least we see, three major challenges which are in the traditional model. So one is basically distribution, or how do you acquire the customer? So this is the major challenge faced by traditional players. How do you viably, economically acquire these customers, and especially when these are low ticket size customers. So when the credit ticket size is very low. So one of the areas and where fintechs come in and help bridge this gap very well is basically distribution to the last mile customer and providing access to the last mile customer, because they do it in a more efficient scalable manner, and hence the reach to the customer or the cost of acquisition reduces drastically. And even NBFCs and banks are able to access these customer sets on riding on the backs of fintech. So that is one of the major challenges that fintech solve. Second is also the onboarding journey, right? So the customer obviously in the traditional manner, going with physical documents, a lot of these customers don't have these kind of documents available to them readily. It's a time-consuming process. So the entire onboarding journey and making that digital, making that very user-friendly, especially again for a low educated, low income customer who does not have the time, energy, wherewithals to basically complete that journey, has the hesitation to walk up to a branch, submit the documents, does not have the time or the know-how to do this. So that is the second piece which fintechs are helping bridge and solve very effectively for a lot of these players, and in hence partnering with NBFCs, helping bridge that gap. The third very important piece is the underwriting piece. Now a lot of these customers again are thin file customers, new to credit, don't have significant credit history. And how do you then underwrite these customers? So how do you firstly collect data about these customers, again, which is a verifiable data, it's not something that's just in the air. And again, how do you underwrite these customers based on thin data points? So here again is where fintechs and companies like FataqPay comes in, where we do the entire underwriting or help the NBFC or the financial institution with the underwriting process of understanding the customer, using technology to understand the credit behavior of the customer, and score the customer basis multiple parameters, which is not just the traditional banking parameters, but also a lot of transactional data, demographic data, social data, alternative data, and based on that be able to underwrite or provide a credit score for this customer. And finally, the major challenge is how do you also make this viable from a collection perspective? So how does collection be economically viable, especially for low ticket size loans? So again, here is where fintechs have stepped in and provided various mechanisms to collect on behalf of the various banks and NBFCs, so that the entire piece becomes easy. So that is where I think in all of these four places. So one is distribution, where fintechs are helping a lot in terms of reaching the last mile customer, in terms of onboarding the customers, so making the journey very digital, foolproof, and easy for the customer, which is instant. Instant is the need these days. If somebody is looking for a loan, he will not be able to wait for 2-3 days to get a disbursement. So getting this entire credit digitally is the second piece which a lot of fintechs are helping solve. Third is obviously the underwriting piece, as I mentioned, being able to underwrite these customers in an effective manner, especially when they are new to credit, underserved, unserved, without traditional credit history. And fourth is the collection bit. So I think these are the various form factors where fintechs are stepping in and helping helping banks and NBFCs to basically synergize with them and provide these and work together and in providing the credit to the last mile customer. And in doing so, as you mentioned, we are trying to achieve that goal of reaching the underserved and unserved and driving financial inclusion in India. So again, there's a large population which is yet unbanked and underbanked. And in reaching out to these customers, and there's still a lot of area and room for play. So I think that is where all of the entire ecosystem is helping reach that end customer and be able to provide access to credit to him, and not just access to credit, getting him financially included, and giving him access to all kinds of financial products. So it's not just credit product, but also savings products, insurance kind of products.
Great. I think, Abhishek, you have touched upon many things which are very important actually. Collection, lending is easy, but how to collect, that is very important, because fintech is working from the one office model actually. So there should be a complete ecosystem for the collection also. So that's good, I think. So thank you very much for your nice deliberation. So friends, now we have Mr. Rohit Arora. Rohit is having very good experience, vast experience in the industry. And he the co-founder and CEO of Wish2 Credit. It's a very large organization actually, which is facilitating MSME and small business owners actually. So MSME, which is the pillar, the backbone of our country actually. If you see, I think we have almost 6 crore MSME organizations. I think which is a big number, and this number is increasing day by day, and their demand is also increasing. And then we have this Make in India and the other things. The MSME can play an important role actually. If they can get money timely or the required money, and they can have the access of the system, I think that will be good for them. So first of all, Rohitji, thank you very much for joining with us. And we would like to understand from you, Rohitji, because you are running a very large organization actually. Can you share with us your perspective on the emerging trends and latest development in the fintech industry? Because you, as you told, you have a US company also globally. You are dealing with the fintech space actually. And then what would be the impact on the recent RBI guidelines? Because RBI come out with some regulation where the FLDG cannot be given by the fintech companies to NBFCs or banks when they are doing tie-ups. So what will be the impact on the industry of that actually? And over to you, and thank you very much, sir.
Yeah, so Ashish, thanks for inviting me, and I think there's been very good points the other panelists have made till now. So yeah, so as a company, we have been around a long time. We started, actually, me and my brother, we started the company in New York in 2007, 2008 time period when there was nothing known as fintech, actually. And over the years, we have two sides of the business. I'm going to come to the RBI stuff after that pretty quickly. So one is our lending business. We are focused on the MSME and the small business space. And then we have a platform business, which is the Biz2X business, where we offer our platform to lenders. Plus also we create ecosystems out there. In India, I think it's very interesting because we have an outside-inside perspective in a way. So we have over 600, 700 people in the company. All our technology development for our global platforms happen from India. A lot of our operations run from India for our US business also, and we are also present in Australia and market also. I think in India, one thing we are finding very interesting is two things. One, obviously, this new RBI notification which has come, because RBI has been very worried about the whole FLDG model over the last 2-3 years. It's almost like shadow banking, what it used to be in the US markets, where it was almost impossible to figure out that who is actually the owner of the risk. So I think what RBI is trying to do by restricting the whole FLDG and even the BNPL model for fintechs who are not Nbfcs is that they are trying to pinpoint that the risk has to lie with an institution that is either quasi or fully regulated. And the other thing is that you cannot get away from doing fast loans just because of the fact that you have an FLDG or you're going to get an FLDG, and then you don't really worry about how the portfolio is going to perform, how things are going to happen over a period of time. So I think in that sense it's a good regulation. It's pretty similar to what Raghuram Rajan launched in 2014, 2015 in India with trying to clean up the banks. So I think that's good. I think one challenge that we find in India, and I think not many people talk about it, is that the regulatory policy in India is very much in flux. So RBI loves coming with new regulations every 6 months, which sometimes it makes sense of what they were doing in the last 6 months, but then sometimes it just diametrically opposite. Coming from again outside inside perspective, I think one thing that a lot of international investors are also looking for, and international companies, is more I would say transparency and more consistency in regulation. I think a lot of fintech is one of those industries which has a lot of tech component. It's a startup, a lot of venture capital money has come in, a lot of other things are happening. But it's an industry which is going to be still more regulated than any of the other tech-enabled industries in the country. Whether it's e-commerce or ed-tech and other industries. So obviously the regulators have to play a very big role. So what regulators in economies like in Singapore and now Dubai are trying to do is very progressive. I would say in India, RBI is well-meaning, but a lot of time when they do these things, it's a pretty much knee-jerk reaction how they do it. And the problem with that is that it's very difficult to build a business around it, because like I said, the recent stuff on fintechs, who are doing the BNPL. Now RBI knew about it for the last 3-4 years that these companies are raising a lot of money. While I find it very interesting the amount of celebration that happens in this country starting from the Prime Minister of the country to everybody else, on number of unicorns we have. I think unicorns for me, honestly, we have done this business for a long time. We have seen a lot of companies go up and down. In my view, that's the first step. That's like a paper tiger. Now, whether a paper tiger can become a real tiger or not, will depend on how do you execute, how do you monetize, how do you make it into a unit economics profitable business, how do you add value, and are you solving any pain points? And are you solving any real pain points? I think the last 2-3 years, what I find is that everybody wants to be a unicorn, which is great. I think it's very aspirational, but are we solving any real pain points? Are we adding value? Are we setting up companies which are sustainable during cycles? And we'll see it now, as the cycle turns. But I think the key is good regulation, even the other regulation that RBI is coming up for Nbfcs to actually recognize their NPAs over a 90-day period is a very good step in that direction. Appointing chief risk officers, for Nbfcs with a certain asset size or above a certain asset size is also good. I think the key is having the right regulatory mechanism and going forward with that. I think the zigzag becomes very tough for a lot of people to tackle, and that will prevent Indian fintechs to become big companies. Indian IT companies have become so big, and IT services companies and all that, and they're globally extremely competitive, well run. It's because government was not there. Government didn't regulate them. Government didn't try to tell them, who they can hire, not hire, minimum wages, and all that kind of stuff. And that's why they've become world-class company. I think a lot of fintechs also need that space and to operate at some freedom and also more guidance, because that's going to help them. Because my view there is that if that doesn't happen, there's a lot of euphoria in fintech. There will be a lot of setbacks, and that will discourage big international investors to keep putting more money in fintechs in India.
Okay, great, sir. Thank you very much. I think you have rightly told there can be some impact on the investment side, actually, because you see that a lot of investments were coming in the fintech, but it might have some impact, actually. And the RBI guidelines are also coming on fintech, which can also be helpful also to some fintech. It can be some challenges also, those are not following the discipline. But it's good actually for the industry in long term, actually. The serious players should remain in the market, actually. Rather, everybody should think that I can start fintech and I can run the show and I will be becoming the unicorn. It is not the right way of, because ultimately there will be a problem later on, actually. So good, I think. Thank you very much for your deliberation. Now, friends, we have Nagin Komoji. He is the CEO of Digital. So when we are talking about lending and all these things, there is a need of somebody who should do actually the back-end working, like behavioral analysis and all these things. Without that, the lending is easy, actually. But because I always say that lending is not a lending business, it's a collection business, actually. It's a recovery business, actually. So the people like you who are into AI and machine learning are helping the industry, overall industry. So first of all, thank you for joining with us. And Naginji is having more than 15 years of experience in the different businesses and the fintech space. And Naginji, we have questions for you because the security challenges like data security, because huge data is there, actually, which is flowing from one place to another place. So the marketplaces, those are having the data of banks, NBFCs, and there is a threat in the mind of the NBFCs and banks, basically. So this data security and cyber attacks can be overwhelming, and particularly when institutions begin to expand the scale of their operations. So your views on addressing these challenges, actually. That is one question which you would like to understand from you. And then what is your opinion on various Chinese fintech apps, which is old issue now, basically, but people would like to understand also, and your suggestion to educate the clients against these apps, actually. So over to you, and thank you very much.
Yeah, thank you for that, Mr. Ashish. So I think I'll address the first question first with regard to the.
Can you brief your organization within 1 minute? I think yourself and your organization.
Sure. So yeah, of course, I was actually leading to that as well. So we run a startup called Digital, which actually provides a lot of data. So we provide a lot of SaaS-based solutions to the players in the fintech space, in the BFSI sector. So we work with a lot of fintechs, NBFCs, and banks as well, wherein we provide solutions in two verticals. So one is on the entire digital onboarding, digital customer onboarding suite, and as well as solutions with regard to usage of collection, gathering of alternate data, and as well as building a lot of scoring models on top of that alternate data in order to help these institutions to better underwrite their end customers for providing loans or for any other purpose, right? So as we go on along with our business, we actually work with tons and tons of data, right? So with regard to developing models for underwriting customers and all that, so we deal with a lot of data, and the best experience that we provide to our clients also is in the form of APIs that we provide them, wherein we address a lot of these models, scores, and all that to better underwrite the customers through these APIs, right? Now, as you see, the industry has moved along wherein it's not a closed industry anymore, in the sense that a lot of these top financial institutions or these latest fintechs that are coming into the market, they're not working with a closed core banking solutions anymore. They are adopting a lot of open standards and API-based solutions, right? I mean, that brings about a lot of efficiency in the system as well, and it also eases up the customer onboarding processes and the customer experience when they are actually coming in and taking loans or taking various fintech solutions through these platforms, right? Now, when we deal with a lot of these open standards and open API solutions and all that, there are bound to be security issues that both the fintechs and as well as the tech providers that provide these solutions need to be aware of, right? There could be cross-platform malware attacks that could happen. There could be DDoS attacks and cyber attacks that can happen, right? Now the best form of, so again, in addressing these form of cyber attacks, right, there could be two types of attacks. One is from external, and which is what I've just talked about in terms of, say, DDoS attacks or attacks on data thefts and all that. Or there could be an internal sort of attacks as well, right? I mean, in the sense that either intentionally or unintentionally, some of the employees from the organizations might themselves try to commit certain cyber crimes in terms of data thefts and all that. So it is imperative to address these challenges, and it is imperative to note that these are real risks for not just the business alone, but in terms of the growth of the ecosystem itself, right? Because one such attack can alleviate trust in the ecosystem, right? And people would be thinking twice in terms of sharing their data on various platforms. So it's very, very, very important for us to take security it's very important for us to take security seriously, right? Like, for example, in our organization, whenever we provide solutions to our clients, we conduct all kinds of audits. So we are an ISO 27001 certified organization, and that's something that is imperative and needed for every fintech that is actually providing any sort of solutions in the market today. Apart from that, we also place a lot of emphasis on vulnerability assessment and performance testing test cases, right? So VAPT is what we call in the industry. So VAPT at each and every solution level is very imperative in terms of again establishing that trust to the customer, saying that your data will be safe with us. We actually undergo several audits and VAPT testings on a regular basis, maybe a half yearly at a frequency of a half yearly thing, and then and just give that trust to our clients, right? So your data is secure, data is not being breached upon, and things like that. In fact, even you need to understand and take care of data securities both at storage and in transit, right? And when I say at storage is when you are storing the data, how securely are you storing the data? What sort of mechanisms are you using? Are you encrypting the data and things like that, right? And as well as during the transit, right? Like when the data is being pulled by or transferred from one system to another system through APIs, how securely are you encrypting the data and things like that, right? So there are ways that that one could comply with the security regulations, and then you can actually make your life much better, right? I mean, you don't have to deal with most of the cybersecurity or cybercrime attacks that might hamper your business, right? Now, and as I told, right, since we deal with huge amounts of data, it's actually very important for an organization like us to adhere to all these norms. And whatever has been asked by the regulators to be followed by the fintechs, I believe that's a good start, but that's just not enough, right? I mean, for your own benefit, for your own safety, for your own security, it's better that you do these audits, VAPT testings, and your own mechanisms to ensure that the security is in place, and at a much more frequency than what has been prescribed either by the regulators or by general standards. Right? So yeah, so that's how I believe that the industry can itself raise to the challenge of these cyber attacks and then can secure themselves from these. Yes, in terms of answering the second question with regard to the Chinese apps that have infiltrated the market, and how one can be aware of those, right? I mean, yes, there is a huge amount. There has been considerable amount of nuisance that's been created by these apps, where these apps were being run without an approval from an RBI or a genuine NBFC behind their back, right? So there were just these fintech platforms coming up and then asking people for money, and then not even being regulated by the RBI because they didn't have a regulated NBFC behind supporting them, right, or actually backing them up. This was a menace about 1.5 years back when the various police force also has taken this into consideration and then has taken a lot of steps, written to Google, and then Google also have taken a lot of steps in terms of eradicating these apps from the Play Store, right? But I believe after a hiatus of about 6 months to a year, these Chinese apps have again made a mark in the industry again. So we see a lot of these apps providing, say, short-term payday sort of loans, right? Loans with 7-day tenures or a 15-day tenure, charging exorbitantly high both processing fees and as well as the interest rates, right? I mean, which are causing that much more havoc and misery to the customers, especially when they don't pay, right? So they resort to about various nasty collection practices, like exposing their data to their relatives or their contacts in the phone book, taking information from the phone books and also information from their memory cards and things like that, right? So I mean, it's predominantly because of these nasty practices that these apps have become a nuisance to the ecosystem itself, right? I mean, because customers who genuinely are looking out for credit are now wary of these apps and are unable to actually distinguish between, say, the genuine apps that are there in the market, which are being rightly run by an NBFC-backed platform, versus these sort of apps that are, fly-by-night apps that I would like to call them. Like they are just there to make a quick buck and then just vanish overnight, right? I mean, by taking away the people's money, charging exorbitant interest rates and all. See, the most important things that the customer should be aware of, right? I mean, they need to understand whether there is an NBFC backing that particular platform or an app from which they are taking the loans, right? I mean, I believe Google and also the RBI has made it mandatory enough to display the names of the NBFCs that are backing those apps, right? So that's the first thing. Again, in the Play Store, when these customers try to take loans from these apps, right? I mean, they can read through the entire material that's being put up on the Play Store, wherein they can look at whether there is a genuine company, what is the name of the company that's putting up this app, whether there is a genuine developer address that belongs to the company. Because I also saw a lot of apps that's being put up in the Play Store with just a Gmail account, right? I mean, how do you believe those apps and things like that? So there are certain due diligences that the customers could do. Don't share your OTPs or any other personal information, especially pertaining to your accounts, to any platform on any platform other than the ones that's been, I mean, for which you are actually doing the transaction for. Do not press on the links that come on the SMSs just like that. Try to see where these links are taking you, whether those links are genuine do they have a secure access on the browsers, like a HTTP link and all HTTPS link, and then try to do some due diligence about the companies and the platforms that are being run before actually they go and give their details. So people might think that even what's the harm in just giving my PAN number or a Aadhaar number, right? I'm anyhow not taking a loan from these guys, right? I mean, that itself leads to some sort of a data theft, and then you at some point in your lifetime you would see that there is a loan in your name which you would have never taken, because the information that you have provided that in that particular platform has been passed on to some fraudster who had applied in your name, right? So even before giving your phone number for the registration, which I believe is the first step for doing a registration or the first step for applying a loan, right? Please do due diligence of yourselves in terms of what the platform is, who is running the platform, who are the directors of the company that's running this platform, what's the name of the company, right? Is it genuine? What are the Nbfcs that are linked with this platform? Are there any negative factors floating around in the market, right? I mean, just by doing a Google search on that particular platform, you will get to know certain negative factors around that platform, right? So these are some of the things, and never ever, of course, share your OTPs or account numbers or anything unless and until you believe that it's for a specific transaction that you believe to be safe, right?
Great.
These are some of the things that the customers need to be aware of. Yeah.
Thank you, sir. I think you have done wonderful actually in terms of your deliberation. Was very, very interesting, and a lot of insights you have given. I think this can save the customers or the borrowers from the wrong anything wrong thing which can happen with them. So our audience will definitely get benefited out of it actually. And thank you very much once again. Friends, now we have last but not the least Vivek Bedaji, who is the co-founder of CreditBee. It's a well-known name in the industry, CreditBee. Vivek, first of all, welcome to you and thank you very much. Vivek, the co-founder of CreditBee, and is the leading digital lending platform since last many years in the country, and he has more than 17 years of experience also. And he has set up another organization called Fintech Association for Consumer Empowerment, actually called FACE, which is, I think we are talking this with Naginji about this customer security, safety and all. So you have already taken this step actually. So the lot of because all our consumer, all our customer actually. So if we can follow the code of conduct and all the things of this association, definitely it will help to us. So, Begji, because you are into personal loan and consumer loan, I think majorly, which is the largest market actually. If you see, we all are the borrower in that segment actually. By choice or by force actually, as of today, BNPL is practically it's by force. So we see that I think everybody must have done this experience in their lifetime about the BNPL kind of product. So it's a very large market. So we'd like to understand from you basically the competition actually. Because banks are doing, Nbfcs are doing, now fintechs are also doing actually. So how are the Nbfs and fintech dealing with competition from banking? Because banks are having the power of money actually at the low cost. So how do you think that this and they have the wider presence also? So how the fintech and Nbfc will compete with them? That is one thing. And then the another is, do you think running a fintech without an Nbfc license would be financially viable in long run actually? So because a lot of fintech are earning a lot of money actually. So these questions came out from there only. Over to you and thank you very much.
Thanks, Mr. Ashish, and good evening, everyone. So I represent CrazyBee/CreditBee. We are one of the largest digital lender in the country, backed by a systematically important in-house Nbfc. And we disburse loan to young professionals. It's a app-based lending where the ticket size can be anywhere between 3,000 rupees to 2 lakh or 3 lakh rupees, with a tenure of 2 months to 12 months. Now, as Mr. Ashish asked, definitely banks have the advantage of low cost of capital. However, what we have realized when we started this business way back in 2016, that there is a large need where there is a large customer segment which is not served by banks or large NBFCs because of various reasons. One, they might be a new to credit customers or first time borrowers, where the banks are still hesitant to give loans. Second, the ticket size or the tenure, what they are looking, since the banks work on a brick and mortar model, somewhere the cost of acquiring customers is really high, and it makes sense for them only to give a certain higher ticket loan rather than a small ticket loan, because that won't be a P&L viable business for them. So in all these scenarios, when we started it, we realized that if we can underwrite the customer digitally there and we can provide a small ticket loan to start with to a customer, then there is enough market to be captured. And in this kind of a segment, or in when there is a convenience play, what has been there, the customer don't mind paying something extra. So think of a situation, one is looking for a 30,000, 40,000 rupees loan. And if they have to go to a bank to apply for it, somewhere the banks will be hesitant if they are not the existing customers. Second, the time to underwrite that person, the procedures what one has to follow will be really lengthy. Whereas a fintech or a digital lender like us can do the complete underwriting back to back, through the technology platform, and can give the loan within, say, 30, 40 minutes. So this customer is very, very happy to pay some extra bucks just for the convenience, what we have seen over a period of time. Another thing, what we have realized that generally the banking customers, the banks are very, very particular in giving loans to their existing customer base, or just focusing on very large metro cities or tier 1 cities, there is a big amount of requirement in tier 2 and going forward tier 3, tier 4 cities, where the customer is looking for this loans, small ticket personal loans, and they have to rely on family, friends, or local money lenders. So if the app like what we are offering, where we are backed by an NBFC, we can do the complete underwriting, we are reporting the customer bureaus, we are making sure all the data what we are collecting is purely protected as per the regulations. Why not a customer will be willing to pay? So what we believe that there is enough market opportunity for both banks and fintechs, and over a period of time you will see both these entities converging and cater to the large customer base present in the Indian ecospace. Now, coming back to the second question, whether the NBFC license is required for the fintechs to run in the longer run. If you look at the Indian lending landscape, it's more or less a very regulated landscape. So somewhere, there is a license which one has to take from the Central Bank of India to do lending in India. Somewhere fintechs have come out with this unique way where they do a tie-up with the NBFCs, do some kind of initial underwriting, pass on the leads to the NBFCs participating, and then the NBFC disbursing the loans. However, all this ecosystem works much better if you have an NBFC in your own group or something. So you can work with other NBFCs also, because they are more comfortable with you having an NBFC in the group. So over the last few years, what we have seen, as Mr. Nagin also mentioned, a lot of Chinese apps or a lot of apps mushroomed into the country who are working without any NBFC license and so on and so forth. So somewhere regulators become very active. They started looking at what kind of apps are running, whether there is a backing of an NBFC on these apps. A lot of customer awareness programs have been started by the regulators and other agencies to make sure that the customer don't get into a unnecessary loan tap kind of a situation, borrowing a very high interest rate loans and so on and so forth. So definitely, if one has a NBFC license in a larger run, that helps, because that further helps you to answer a lot of questions, not even to the Central Bank of India, but many other regulators who come into the picture if customer does any complaints and so on and so forth. So yes, I personally believe that in the longer run, NBFC license is very much required for the fintechs to grow to a next level.
Great. I think you have given a lot of insights which are very, very important. So from your point of view, in the longer run, the regulator will definitely we have some kind of system or some kind of requirement that anybody who is into lending space, either through the marketplace or through the direct lending, there should be some kind of license, maybe in a different category of license, I think digital lending or something. So they're like MFI, microfinance license. There was no category of microfinance earlier. When the microfinance industry has grown, the regulator came out with a different license, separate license for that actually. So definitely there will be something like that, but there'll be, I think new guidelines are coming. So hopefully we'll know also what are the RBI thought in that fintech space. But nobody can stop it. What we could understand from this discussion, there is a need of collaboration between fintech, NBFC, and banks. The one company of them, one organization cannot be the master of everything actually. Maybe at the Bajaj level, this can be possible, but not at the all levels actually. So that's a good discussion which we had today. I think we have covered almost all the related areas of the collaboration from the NBFC, fintech, and banks point of view. We have some questions from the audience. I think they have asked about some different questions. So one question which we have from Mr. Narayanan, who is going to ask question from Nagin. This question is from digital data security point of view, introduction of blockchain software technology can solve the problem of tampering data, etc. Your opinion on this issue. So he's asking that introduction of blockchain software technology can solve the problem of tampering of data, because as you discussed in your discussion also that tampering of data is also very serious actually. So Naginji, can you give the reply on that?
Yes. So, see, basically, the blockchain technology is currently nascent, right, in the industry, and I don't think it has actually seen that much of a proliferation in the financial sector space. I understand that blockchain has been in use in various other sectors, and blockchain is specifically meant to address the tampering of data and the various data-related issues. But it also relates to the matter of decentralization of data, right? So we'll have to wait and watch as to how RBI or even the central governments and people like that would be willing to decentralize the data. So they are really in view that most of the data, but especially pertaining to the financial sector, has to be centralized, which is why you have organizations like UDAI and all, having a centralized database and having a centralized data of even say KYCs or the financial data and things like that, right? So we'll have to wait and watch. Yes, it will definitely solve a lot of these issues in terms of tampering of the data and all, but it has to play well with the regulators, especially who are wary of decentralized technologies, right? I mean, that's the main challenge of the adoption of the blockchain technology, especially on data security in financial sector.
Okay, great. Thank you, Naginji. There is another question from Mr. Kumar PR. He's into faculty, I think faculty in some college. So he has questioned this very, I think, macro kind of question. Digital divide in the country is a challenge of the ecosystem in the discussion. So what is the digital divide actually? He's trying to understand, I think. Anybody can take this question? Can I repeat this question actually?
Yeah, sorry, Ashish, couldn't get it.
So he asked the digital divide in the country is a challenge of the ecosystem in the discussion. So I don't know whether what is the purpose of digital divide, what you want to dig out from that actually. So he may be saying that Bharat and India kind of question basically where.
I guess so.
Please. So Nagiji, would you like to take this question or anybody else?
I can take that. I think what it's being inferred when we say digital divide is that you have the have and the have-nots. If that is the question where it is directed, wherein we see a completely convergent native population very, very keen on consuming financial product digitally. And then on the other side, we find people who've yet not got comfortable with even at the minimal level, the digital, or they don't have access or to those resources, connectivity, and so on and so forth. Also, it may mean, so I'm going to take a wider take on this, and it may also mean the access of data imprints the footprints for people who have data which can be digitally consumed versus customer, the population where there is no digital data available or cannot be consumed. I think how do we handle that? It's what has happened in the short period of a decade or less, and the amount of consumption pattern that we have seen. Fortunately, we're not in a country where we the mobile per se penetration is less, right? Thanks to mobile, the digital part of it is largely covered, almost gone to rural, uh, and I see the divide is not much, and it's only with education infrastructure that it will keep coming better. Good part is data is almost everywhere where the mobile network was. There was a point wherein mobile connectivity was there, but data connectivity is not there. I think with the common operator set that we have, largely the data is already moved into that direction. Um, and with account aggregator, and I touched upon this earlier also, with more and more innovation, fintech players coming in, not just fintech player, consumer tech, e-commerce coming in, they will continue to lay the infrastructure across geographies. And I think geography is not a challenge. I think if it is demographics, which is a channel which will only improve with income levels and education level, which is also improving significantly faster. Uh, I see it's evolving, and three levels which are looking at extremely disruptive. One is the sheer amount of consumption which is happening because of the demand and supply. B, the great infrastructure which is coming with the speed of infrastructure and the way it is coming together. And C, the consumer behavior which is coming together. So while there was a divide, unlike a financial or economic divide, the digital divide is less in India. We are in a fortunate space in time because, and all thanks to mobile, and our ability and our desire to connect with everybody else has in fact connected a lot of other pieces together.
Okay, thank you. Anybody would like to add in that, or?
No, basically, I just wanted to add, I think in terms of the digital device and how do we address that, right? I mean, we need to understand the fair amount of use, where is the fair amount of usage of these customers who are not yet digitally savvy happening, right? I'm pretty sure that they might not be digitally savvy in terms of using a complex app like a super app, right? But they are definitely be with a smartphone in their hand. They definitely be using apps like WhatsApp or a share chat and all, right? So it is also important to understand, that it is necessary to build apps for these customer segment which are easy to use and which also complement their existing usage, right? In the sense that build channels that they can access financial instruments through the existing channels that they are already using, like a WhatsApp or a share chat and things like that. So just wanted to add on that particular point, especially for people who want to venture out into providing financial products and instruments to, say, people in Bharat. It's extremely important for them to know that, building a super app is not the concept over there. It's a simple app in terms of ease of usage as well.
Okay, great, good. So I think we have already crossed our time limit now. So I would like to wind up the session. So first of all, I would like to thank you to everybody from the panelists for taking time for this program. And I think your deliberation was wonderful. Actually, a lot of insights we got in this discussion. And because we have the audience who are from the different background, they are the startups, fintech, and the NBFC banks also. So I think everybody will get the benefit out of this discussion. And I would like to thank you once again to all the panelists and the audience who had patiently listened us, and they could contribute in terms of their questions and all. So definitely, I'd like to thank you to all of you for joining with us from different part of the country. And I hope that you will be more knowledgeable from this fintech and NBFC point of view, and you can take the advantage of it. Then I would like to thank you to all the people who are involved in the organizing this program from the Resurgent India. So Rohan and the team members, those have done wonderful job. They could bring us at one place, and they've organized this program. So once again, I would like to thank you to all of you, and I hope that this 1 hour was not sufficient for this kind of discussion. Even the Naginji topic, which it will take more than 1 hour actually, what I believe. So Naginji, we will try to work out another topic, which mainly on the security point of view, cyber security and all, because this is a very important part of the entire discussion, where the consumer and those are uneducated, or they are not aware about the technology and all. They are pissed off actually to some extent actually. So how to save themselves, how to get them aware and all. So this organization which has been created like FACE, which has been, I think Mr. Vivek has started this organization. These kind of organization will definitely help to these people actually. But I'll see that from this discussion, one is that the collaboration point of view, it is complicating, it is complementing each other, not the competing actually. So this should be the tagline, that the collaboration will be required. At what stage, what level, that depend on the organization to organization, but it is always beneficial to the all the ecosystem, because we need faster speed, we need the lower cost, and the better collection from the fintech or NBFC point of view. So good to have here, and thank you very much once again to all of you. Thank you once again. Thank you very much.
Thank you.
Thank you.
Thanks all.
Thank you.
Thank you. Thank you.